it's a bear market, the overall market, whatever news or noise people want to say, and then boom, something just goes up 200%. But it's going to be faster, right? Opposed to when the market's just trending and everything's going good, it's a little slower. It might move a little more gradual, for lack of a better word, right? It might move a little more steady and give you an easier entry and an easier exit. Whereas though today everything was ripping up. Everything was, pushing out and breaking out, whatever you want to say. So I got aggressive. And again, I'm gonna try to mix in and edit these videos quickly, this one specifically. So just follow along, but I'll put a screenshot. I was video recording earlier of just the overall percentage gains. You can see the market was a little hotter, but again, ride the momentum, but don't believe it. Ride the hype, but don't believe it. You've seen that on many of my videos, on graphics, on posts or whatever. And that wasn't even something I coined. That's something actually Tim Sykes coined. I don't know if that was a course name. I don't know when he said that, but I remember him saying that. And I just always held that close to my chest. Because one thing, and this can sum it up as good as well, he's always said that about these stocks, and that was something that was different that he would say than other people, other teachers, other gurus, and it's something that really stuck with me. And I swear to you, I swear by this, right? Most of these stocks, yeah, they can push in a bad market, good market, medium market, but that's gonna determine how long you can stay in them and how aggressive you can be in them as well, right? So it's not just about, oh, Tesla's gonna go up so high. When is it gonna go high? Why is it gonna go high? When is it gonna be that it's going high, we're used to it going high, and then it's just gonna crash, right? Again, ride the hype, but don't believe it. You can make money on it, but then there's gonna be people, for example, there's 3 stocks I played today, or 4 or 5, however many it was, right? More than usual, right? There's gonna be people that look at those stocks in an hour or so, and they're thinking to buy it. I'm already gone. I'm an hour away from the house. I'm gonna be, right? I'm done. I don't care if it goes up more. I know some of them will go up more, but that's when it gets dangerous for short sellers and long buyers, because it's in the middle. It's unpredictable. That's gambling. You don't want to be playing the stocks unless you're up so much from the morning and you're just holding it, which is, kind of a gem, but I'll let it go. I'll put that out there. Sometimes I'll hold these stocks, but what you'll see is if you look at it in detail, I'm holding it because I'm already in the money. I already made money. There is no way I can lose, right? When you look at it from a percentage, I don't care if you're playing with $1 million or $10. If you're up X amount of percent, the stock has to go down a great amount for you to lose money. It's just simple math, right? But to make my point, right now, midday, these stocks are just gonna go up and down. There is no pattern. There is no, it might form a pattern. It might later on, I might be able to look at 8 p.m. and say, oh, I figured this was gonna do this. Well, that doesn't matter, right? What matters is how are you gonna easily get in and easily get out and make money, right? And you do that when you know the stock has a great chance of going up, or if you're going short, the stock has a great chance of coming down. Not when it's in the middle and everybody's fighting. When it's in the middle, these people who lost money in the morning, they're just swinging. So if they're swinging with big enough money, the stock might go up. It might go down. But that's when, you can incur some of the worst losses, when it's just mid-range and you're just getting chopped and chopped and chopped. Me, I took that momentum, I rode the momentum, but I didn't believe it. I rode the hype. I could tell you some of the news on the stocks I played, but if I had a gun to my head, I couldn't spit it off right now. because it was so fast, right? But what I did know was when I was getting out, when I was exiting, yeah, I might leave some money on the table, and I actually did leave some money on the table, but I also left with money, right? That's so important, because you could get wrapped up and caught in the hype yourself and say, oh no, this stock has great news and I already made money this morning. I'm gonna make another 1,000 or 300 or 100, whatever your account is, right? But you also can be jamming yourself up. You also can be putting yourself in a position to where as though now the whole day you have to watch and make sure you don't lose money, right? And that's just not a good place to be in, no matter what. No matter if you had a goal to make 1,000 a day, you only made 100, whatever it is. It's not about that. It's about what the stock wants to do. This is one of the only businesses where you don't force it. You can sit there all day all you want. You might make another million, you might lose everything you own. So you have to be careful and wise and graceful when you're in the stock market. You have to be what they call nimble, right? You can't just be forceful. It's not football, it's not boxing. You're not gonna punch your way out of these stocks, right? You're just not. And they can knock you out before you can knock them out. So that's it for today. Like I said, I'll post up for sure the screen recording, a couple entries and exits for y'all, and that's pretty much it. So I'll probably be able to cut this video and put it out before that one, but in that one, it's kind of like the same story, right? The market was iffy, for lack of a better word. That is a good word for it. It was iffy. It was okay, right? And at that point, something moved tremendously. Like it might have tripled, it might have went crazy right before I was showing it on film that I thought it would, but I wasn't sure. And anytime you're not sure, anytime where it's like it's a 50-50, it's whatever, you can push yourself to gamble. Because if you're gonna go and play it when you don't know for sure, when you're not fully convicted, even when you're fully convicted, obviously the play can not do what you want it to do. But when you're starting to second guess it and you're shaky and you're like, oh, it already did this, you might be too late. That's so powerful to understand. That's something that I've never seen a lot of these YouTubers say, or, you know, people on Twitter say. Because going long, to me, a lot of them play these longs differently. That's why I don't show all my trades and all my entries and exits, because I see that my entries are a lot better than a lot of people's. That's the bottom line. If you're buying a stock at 110 and I'm buying it at 99 cents, my entry's better. I don't care how you cut it. I don't care how much you might make on that specific day. Bottom line, if my entry's lower, it's better, right? So that's why, again, to use that same point of reference, once the stock's up to 120, 140, comes back down, it starts to do a lot of back and forth or ping pong action. Now, to me, you're risking a lot more, right? You're risking